Good evening, everyone. My name is Isla Barnes. I'm a member of the International Model Investment Club. We are here for our April meeting. These are our links for YouTube, for Facebook, and that you can visit our club at our Better Investing page. So, we were founded in May of 2016. It's a better investing model club. It is open to the public. Our primary purpose is to help ourselves and others learn how to invest and how to operate a model club. We have monthly meetings. They're held on the third Monday of each month. In December, we meet on the second Monday of the month so we can avoid holidays. We use hypothetical money, not real money, so that we can avoid any issues with currency exchanges and taxes. Primary role of the Model Club is as a learning lab to learn better investing principles and the fundamentals of stock investment using the online selection guide, and to learn investment club operations management. All meetings are held online, serving visitors and guests from around the world. We are a model club with an international community. We currently have 10 members from the United States, Canada, and China. Now, the agenda is available in the handout section of the control panel, which you can see a mock-up of it on the right side of your screen. All visitors and guests will be muted during the meeting, but you may post questions in the question segment and we'll answer them as we can. At the end of the stock presentations, all visitors and guests will be unmuted and will be given their opportunity to make comments and to ask questions. Meeting segments are timed. Alerts will be signaled when the segment is near the end and when finished, so listen for that. This is our disclaimer. The information presented is for educational purposes only and is not intended as a recommendation to buy or to sell the securities that are mentioned. The views expressed by those of the participants only do not necessarily represent those of Better Investing. Investors should conduct their own research and analysis before making any investing decisions. Securities discussed may be held by presenters in their own portfolios. This presentation may contain images of websites, products, or services that are not endorsed by Better Investing or by the presenters. This meeting is recorded and will be posted to our YouTube page. Okay. So now, our next section is our treasurer's report. Hanny, are you ready?
Yes, thank you. I just need to make myself a presenter.
Uh-oh.
Hello? Yeah, can you hear me?
Yes.
Okay. Oh, show my screen. Okay.
There it is.
There it is.
That looks nice.
What is it that you see?
A beach.
Oh, okay.
Now we see the treasurer's report.
Yep.
Okay, 1 second. Swap. Okay. So you can see the title screen. I swapped.
Yes, we can.
Okay.
Yes.
All right. So first thing I'm going to talk about is the cash transactions. Last month, we had a beginning balance of about $13,000 and change here. This morning, I put in member deposits. We currently have 9 members because one member withdrew from the club. So I put in $100 each, 900. So the cash balance is $14,163.48. The departing member, we have to pay them out. And so their current valuation is about $17,812.45. So we need, and we'll discuss this later, but please give some thought to this. So we're going to be short roughly $36.50. So we'll have to sell something. We can sell one or more shares of something to get to that 3,000. And then we'll pay our departing member out. Now, all of this is, as you said, Isla, is just paper money. It's not real, but in order to track our portfolio performance. We do, you know, account for all of these things. Okay, next slide. So these are our holdings right now. This is our valuation report. And in this second last column here, you can see the gain loss for each of the stocks that we hold. ASML, we have negative 11%, and NICE also. The rest are all positive. Our biggest, I think, is Meta, and then Schwab, and Vertex. So those are the three biggest. And like I mentioned, we have about $14,000 in cash right now. So that was my quick treasurer's report. I do have another section. I don't know if I should go through it or not, Jay. Do we have enough time?
We have 7.5 minutes.
Yes,
Okay,
we have time.
So, okay, I'll do it very quickly. This is I came across this publication. It's free of charge. You can download it from FactSet. FactSet every quarter they do an earnings season update. So I downloaded it and I put it through AI to summarize it, and it gives you some ideas about what's happening in the market. So the S&P so far, and keeping in mind not all 500 companies reported, but the companies that have reported so far are showing a 7.2% year-over-year earnings growth rate. So that's 7 consecutive quarters of earnings growth. 71% of the companies that reported so far have beat estimates. And but this is the 5-year average of beating estimates is about 77%. The forward 12-month PE ratio is about 19. That's below the 5-year average PE ratio of 19.9, but above the 10-year average of 18. So even though there's a lot of negative news, it's not looking too bad right now. Companies that even though some companies report positive earnings, they still some of their stock prices are drop, probably because of uncertainty. Magnificent Seven, and the reason I highlighted this is because we own 3 of them, Amazon, Google. So they're expected to report about 14.8% earnings growth for first quarter. Amazon is the top contributor, and for the full 2025 earnings, they expect that they'll report about 16% earnings growth versus 36.5 last year. So quite a drop, but still pretty decent, 16%. Some sector-specific insights. Information technologies, and the stocks we hold in this sector are ASML, CrowdStrike, Meta, NICE, Paychex, and TSM. Second highest earnings growth at 14% so far, and the highest revenue growth at 10% year over year. And the semiconductors are the largest contributors to the sector's earning growth, with a forward PE of 22.9, above the 19 or 18% average. And the analysts expect that this sector is going to have a large increase in price this year, about 37%. Healthcare, which is ResMed and Vertex, highest earning growth so far at 34.5%, second highest revenue, and net profit margins improved 8.2% from 6.6. So these are kind of the sectors that people are gravitating to instead of the tech sectors. So healthcare, consumer defensive, makes sense that they're the highest earning growth. Financials, Schwab is the only one that we have there, 6% earnings growth rate. They were estimated to only do about 2.6. And then 88% of the companies beat their earnings estimate. And this sector has a forward PE of 15, below the S&P average. International, 40% of the S&P revenue comes from international companies and information technology, as you would expect. A lot of the Taiwanese chip companies and ASML, which is Dutch, are in that. And that information technology has a lot of exposure to international companies at about 56% of revenue. Future outlook, so they're projecting about the S&P will grow about 10% for the full year, and earnings will grow at about 14%, and the expected target price or multiple will be about 27% from current levels. So based on the things that we hold, I think we have a pretty good mix. I have one other thing which I wanted to share with you, which is the impact of tariffs on earnings, because it's really hard to predict earnings despite what I just said. And I have a couple of just examples. So I picked this example because as a first year student in university, my first summer job was at a factory that made mufflers for cars, very close to Guelph, Ontario. This company, Linmar, they make transmissions for vehicles. And this kind of shows you the integration of the North American auto industry. So this chart is showing how parts move across the border before a car is made. So for Linmar in particular, they take scrap metal and they send it to a smelter in the States, in Ohio. And then that plant makes some parts from the steel and sends it back. Then they get aluminum housings from Mexico, and they get a few other parts from a plant in Illinois. Then they put all that together and they send these partly assembled parts to a transmission assembly plant in the US. And then that plant sends the completed transmissions back to Canada, where some of the vehicles are assembled, and then they're shipped to the US. Okay, so you can see like there are a lot of, and this is just one plant and one part, which is transmissions. There's literally hundreds of these plants scattered across the borders between Canada, the US, and Mexico. So this is just one small example. Okay, now under current situation, every time one of these things crosses the border, regardless of whether it's a finished product or not, it gets taxed by 25% by the US. And then the Canadian government does their reciprocal tariffs and taxes it by 25%. So going back to this thing, you can see how many times they're going across the border, and every time they get taxed by 25%. So the end result is car prices in the US and Canada and Mexico will be much higher. So that kind of explains why it's very difficult to estimate earnings, because the companies have to figure all this out, and it's not easy. And on top of that, all of this auto manufacturing is just in time, so they don't store parts, and they have very, very low sort of warehouse capability. So anyways, that's I think my 10 minutes is up, so that's just wanted to show you that. Okay,
That
thank you
was
very much.
great. Thank you.
So who's next?
Oh, that's very depressing. Very, very. Okay, let me get rid of that. No, 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 no.
Any?
Yes, sir.
That's interesting slide presentation. The
Thank you.
one
Yes.
product you showed, there are 7 times the tariffs going back and forth to 7 times.
Yes,
7 times.
like I used to work in this, like I said, in this muffler plant, and we would get like certain parts. The trucks would show up from the States, and then we'd do something to the parts. We'd do metal stamping or something, and then they get sent back, and then they come back again, and it's just like But you know, it sounds very inefficient, ready, but actually they had figured out that this was the most efficient way to do it. But just a side note real quick, just to give you an idea about inflation. So when I got this job as a first year university student, I thought I was in heaven because I was getting paid $7 an hour. And
Mm,
and if we worked really hard and made more parts within a certain time frame, we got an extra 50 cents or $1. So
oh.
times have changed,
Mm.
This slide shows there are 7 times the tariffs on the same part going back and forth. So the
basically.
final price more than double or probably triple, and that's scary.
Yeah,
Probably. Yeah.
I don't know how they calculate the price of the part though, because it's not like a finished product. So I'm not really sure how that all works. But
But
anyway,
just thinking about how that will work with all of the various parts that go into a car
yes, yes. So
sounds horrifying. Which is, I
Yeah,
guess, why
scary.
people are busy buying cars now instead of waiting.
yeah. Anyways, I have to go put a little boy to bed.
To bed, yes,
My grandson. So I will
yes.
return. Hopefully he'll go to bed right away, and I'll be right back. So
Okay.
thank you.
Okay. Okay. So next is our education topic from Mel.
Yes.
Are you,
Can you
are you
get me to share the
can
screen?
Jay is taking care of that. Wonderful.
Okay, I just click that. Uh, the topic is the earnings call transcripts. One of the let me just get one up here. Can you see this?
Yes.
Okay. Uh, when we do our quarterly earnings report, we look at many different documents, and one of them is the earnings call transcripts. And they are kind of lengthy. This one is for NICE. I had presented this either 1 or 2 months ago, but as you can see, there's it's kind of run-on sentences between, in this case, Scott Russell is the CEO, and he gives his spin on the earnings, and then he passes it off to his CFO, Beth Gaspich, and she gives her spin. And finally, you get to the uh, uh, investment advisors or investment analysts who then pepper the people for questions, and you really get some interesting dialogue back. But you know, if you look at this, it's pretty lengthy. So what I did is I try to use some of the large language models uh, to kind of make this a little bit better. So let me then switch to my PowerPoint. Uh, you know, so large language models, using these to summarize transcripts of company earning calls. And let's go to this first one. So our general procedure, all of you do this, I'm sure you download the earnings call transcript. Seeking Alpha for sure has it. Motley Fool often has it also. And you have the 2 parts, presentations by the company executives, and then questions from the analysts. So I noted where the executive presentations ends and the analyst questions begin. And what I have found was that it's best to do each section separately. And then you want to ask the chatbot specifically how you want the output. So for the executive sections, 3 or 4 bullets for each executive. And then for analysts, you want the questions and the answer for each analyst. And these are the prompts that I used for this particular transcript. I inform the bot that I've uploaded the transcript. First 7 pages cover, well, not only the CFO and the CEO, but there's other people involved, the moderator, and then the person that's running investment relations. So this first part will give me a summary of the executives. Then as soon as that's done, then I add the second prompt, which says, hey, let's take a look at the analyst questions and answers. So let me go back and show what transpires. And the best chatbot I had was ChatGPT. And hopefully you can see this. So this is the output. There you at the top of this, you see my first prompt. And it really, you have your 4 bullets. I asked for 3 or 4 bullets. It gave me not only the bullets, but it gave me a title for each of the bullets and what it covered. And as I checked back with the actual earnings transcript, it's pretty spot on. And this is one for Scott Russell, the other for Beth. And then here's my second prompt. And then it comes out pretty neat. Each of the analysts ask a question. Some of them have follow-up questions. And then there's a response. I guess I was a bit surprised that it came up. And then I double checked to make sure that, that I was getting the truth here, or, that there was good correspondence. So what are my results? Okay, so I found that ChatGPT provided the best overall presentation. And as I just showed you, there was the 4 numbered segments, each with a heading. The Q&A analysts' questions, they were summarized by bulleted answers for each analyst. I looked at perplexity, which I like, because when you're doing research, it gives you references. But what I found, this was kind of shocking. It produced a nice presentation of the executive summaries, actually more detailed than ChatGPT, but the question and answers were completely inadequate. It's almost like it was hallucinating. So I was kind of shocked. Gemini was okay, but it provided less detail than ChatGPT. I did Copilot. It also was okay, less detailed than ChatGPT, but its presentation was kind of, how to put it, it didn't look good because they used a lot of dashes and pounds and asterisks and all of that. I tried Claude. It said, hey, your file's too big. And then DeepSeek, I tried that, and they said, hey, server busy. So that's what happened there. Let me go on here. Additional notes. If you're summarizing a large file, the common free large language models, which I used here, may be inadequate. And there is a free bot, Notebook LM, which can handle pretty large summaries. And so, if you Google this, you have something that's large you want a summary of, Notebook LM is the way to go if you want to, not have to pay a fee. I advise everybody to check out the recent BI Ticker Talk presentations. Susie Artsberger, she gives many examples of prompts that can be used to facilitate stock research.
3 minutes left. 3 minutes.
Okay. I was also advised people, and I'm sure a lot of you are using this, but I found some of the Google courses on Coursera, the Google AI Essentials and the Google Prompting Essentials. I found those pretty good, getting myself up to speed on how to do prompting, how to make an agent. You know, you talk about agentized presentations. It's not that bad. I took this from Susie Arsberger's presentation. She gave me her permission. You know, I'll email a PDF of this to all members, and then I'll just close this with some of the other prompts that she used in her presentation last, I believe, Thursday. Okay, that's it. Any questions?
That's a lot. Yeah. It's interesting that Chat GPT would be the best, and Perplexity, which I've heard other people say is, you know, very good for whatever their use is, was not so good.
Well, for this purpose, I've used Perplexity, for example. What I wanted to do is understand a little bit more about how everything fits together in this data center build out. And I got some really nice feedback using Perplexity. So that's why you have to kind of look at a couple of different bots.
And it really depends on what you're asking it
Yes,
and how you ask it.
Yeah.
for sure.
Mel,
Yes.
Mel, did you try Grok? Grok?
Oh.
So right now I'm comparing. I usually compare Grok with ChatGPT. These two are my favorites. Grok actually also very user friendly as well. Especially you can have a conversation with her, because her nickname is Ara. Right now you can even use Grok version. Like for example, if you take a picture and say, "Hey, what is this?" and then she will tell you all about it.
Something to try.
And yeah, you should try. I'm using both. I'm so glad you did a comparison. Right now, I'm narrowed down to ChatGPT and Grok. These two.
Okay, Grok. Okay,
I agree
even
with
think
you.
about that.
That phone, yeah, I agree with you. AI really helped us to speed up our researches. I found it very useful too. We do have a guest asking if you can share your PowerPoint so that she also wants to learn about.
Right. We can
what
use
does
that for more learning.
LLM stands for? Yeah, what is LLM?
Large language model.
Oh, got it. Okay, I'm not familiar with this abbreviation. Thank you.
May I ask you a question?
Is there a place
No.
I should in our storage place to upload the
Yeah.
presentation?
Yeah, you put it into our club's education topic folder, and then I can share the link with the guests.
Okay, we can do that later. We don't have to go through the details now. So there's an education folder. Okay.
Education folder. There's education topics folder. I can text you. I can message you right now on the GoToWebinar, and let me send to the link, and you can upload, and I can share it with the guests.
Excellent.
Okay.
I have a
That was
question.
great, Mel. Thank you very much. Go ahead.
Mel, it's a very interesting. I never tried it, and I would like to know in what format do you provide the transcripts to these Chat GPTs and other software? What format transcripts?
What format?
Yeah, is it voice format or PDF format or?
Well, actually,
it's text.
It's either. Okay, you can upload either the PDF. I mean, when you have your transcript, it usually comes down as a PDF. You should probably keep it that way. And then I think saving the output as PDFs is also probably better too. And you just type in your prompt. You know, there's a square there. There's a prompt, and then you just type in your question. Or actually type, if there's several prompts that you have, you can type them out separately by yourself, and then highlight them and copy and paste them into the box for the particular bot. So, and in the future, I'd like to hear from others how they're using all of these large language models to facilitate their their work. So
It's so powerful. I really appreciate you sharing today.
Yeah.
Because
I
it
would
saves
love
a
to.
lot.
I would love to have a session from you, just to, one example, go through a couple of these softwares. That would be nice. But
Yeah.
maybe in the future,
you can
in
give
the
me
future,
In
private
the
name.
future,
I'll
yeah.
try to talk
We
to
can
them.
do a live demo. Yeah, live demo. Even
That
if
would be
tonight we have
great.
any questions, just ask. Yeah.
Yeah, I don't know where to start AI stuff.
Yeah. Another attendee guest also mentioned that other financial analysts also use Grok, and he found also very useful for Grok. Right now, Grok is kind of my favorite. ChatGPT, I use that too. Yeah. We can do a live demo in the future next time if people are interested.
Absolutely.
Yeah.
we go on.
Oh, Bagu's here. Just in time, Bagu. Ayla.
Hi, good evening,
Bagu.
everybody.
Oh, great. That's
Hi,
great. Okay.
Bagu.
Just come on the tail end of you guys were talking about large language models, so I missed
Yeah.
all the front piece.
Oh. Oh. Uh, so Bagu. Shh. Okay, go ahead, Ayla. You go ahead. She's the meeting facilitator tonight.
Like I know what I'm doing. Okay. So we're grateful to have Bakul with us this evening, and he's going to give us some education on how we can present our quarterly and annual reports reviews. So we can do it succinctly, we still get the correct information over, but it doesn't take the entire meeting.
Wow, it's taking an entire meeting. So how much time do you spend per stock, for example?
It depends on who's presenting.
Okay, so you have to give it a time component limit, like 5 minutes. That's it. So
That's very short for almost all of us.
yeah, and then you have to hold people to that time, and so you focus on the salient parts. And so, like, you can say, the first half or whatever time allotted, whether it's 5 or 10 minutes, you say first half is SSG update, and along with the prices, and you might have to look at the original forecast that was done for revenue growth and EPS growth and high and low prices from whenever you started or the previous time, and then see what's the update. So that's one, and you can do that very quickly. It shouldn't be taking a long time. So the next part is it's up to you guys. Like, I mean, if you're doing things on trailing 12-month basis, then your quarterly and annual should be the same. So suppose you say we're going to track return on equity, and if you do it every quarter rolls in, and you take the ROE and you compute that on a 12-month basis, basically, which means last 4 quarters. So you take the last 4 quarters of net income and you divide that by the equity, of that quarter. Well, guess what? You got a trailing 12-month ROE. You can do the same thing with return on invested capital, and likewise on the free cash flow to sales, which is free cash flow to margin. The reason why I say that, that's it. You should be done after that. And maybe a little news piece like, oh, the company, fired the CEO.
Uh,
Or anything that's material or you think that would be relevant to the business, and so that shouldn't take long. And so that's how it should be done. I mean, otherwise it's going to drag on, and people are going to put stuff that you may need. The whole point should be just the enough things that you find that the whole club members decide on and agree on, and then make sure you hold you hold it to the time limit, so people can focus on the main things, right?
Bagu, I want to be visual. As you were just talking on the matrix. So I just bring up a SSG on my screen so that everybody can see. So you are saying, first of all, are we talking about quarterly, correct?
Yes.
So you are saying refresh the data, get
Right.
the latest data, right?
All right, and
It
then
doesn't
what?
need to change the forecast. It doesn't need to change the forecast.
Yep.
Okay, go ahead.
So you don't need to change the forecast, but if the person who's assigned the stock realize that, oh, this thing might need to be downward adjusted due to recent conditions, maybe it's tariffs, or maybe competitor comes into the play, or maybe they have a new product line, so now you have to forecast it in an upward direction, then that needs to be done by that person. And then that's how you can get to it quickly and get done with it.
Okay. So they need to focus on, can you repeat that one more time as looking at the front page?
Yeah,
What
so
do they
this
need to
one,
report on?
if you think the original 15% was okay, then you don't make any
Mhm,
change.
mhm,
If you go on to the next tab, I call it the back page usually. Yeah, valuation
mhm, yeah,
return.
mhm,
If you
mhm,
feel that the high price and the low price need some adjustment,
mhm,
just due to the fact that, okay, if you go up a little bit, now you notice like all these price earnings ratios and stuff, so you revisit those and say, okay, if my average high PE is 38.8 in section 4A, is that still valid? And if that's valid, then you don't touch the high price. If the earnings growth on page 1, the analyzed growth and quality page, if that hasn't
mhm,
been changed, then
mhm,
that shouldn't affect your high price. So high price will stay
mhm,
intact. And
mhm.
likewise, you look at the low price and whatever criteria you use for the low price, see if that criteria still holds. And so if it does, then leave it alone. If it doesn't, then you can update that and report it out. And that's it. Those are the 4 things you have to look at: earnings growth, sales growth,
Okay.
high price, low price, right?
About the quarterlies, the
And
quarterlies
then
give
the
you
quarterly data.
trends.
Right. So you were saying what?
I'm just suggesting that you might want to look at the quarterlies just at least momentarily to see the
Yeah.
trends in both the earnings and revenues.
Yes. No, you can do that. Absolutely. So if you look at that and you find something, go down trending of sorts, then you got to figure out like, okay, why is this going on that way? What company is this? I didn't even.
This is
NVIDIA.
Oh, it is
Nvidia.
NVIDIA. Okay, so you go down,
Nvidia.
you gotta
Nvidia.
look at the quarter, look at the sales, right? A change, the sales change on the rightmost column. It's trending down like 125, 208, 91. You see, that's not sustainable for long periods of time, right? And growth characteristics of sales, it's like you'll get a bubble for a while, maybe a few years or whatever. At some point, the market may saturate, or you have new competitors coming with semiconductors to challenge NVIDIA. So you might have to consider looking at that a little bit more closely, right?
Right.
You say that we need to focus on the trailing 4 quarters, right? Not the
Yes.
left side. It's this side, the trailing 4 quarters.
Yeah.
And look at the
So
You can look
trends. Look at the trends and how
at
it's
trend.
going.
Yeah.
yeah,
Yeah, you can look the graph like this, or you
sure.
can
You can
look
look at the graph. Some are numbers people. Most people are visual. So if you're
Mm,
visually oriented, then you focus on the visuals. If you're numbers oriented, then people can report it according to the numbers that they see. It's the same thing, but different way of observing that. So that shouldn't be bad, right? Because like the data, when you do a data update, well, guess what? All that information is there. So that shouldn't be kind of challenging, right? I mean, it shouldn't take more than 3 minutes, I would say.
Okay. So the bottom line is to still just focus on the data, basically.
Yeah,
The
because
trending up, trending down, and then figure out why it's down. Yeah.
exactly. And if you already forecasted your 15% growth, if that is not changing, then there's nothing to do on that page 1.
Mm-hmm.
And the
Mm-hmm.
next one you look at and see if high and low prices needs to be updated.
Mhm.
and see if that needs to be updated. If it's updated, then show like, okay, what was it before versus what it is now. In other words, where you see this evaluating risk at a glance, you need to hold that original forecast, and then if you update prices or anything with new information, see what differences occurred. Likewise, if you scroll down a little bit, yeah, that box where it says SSG result summary, same thing there.
Mhm.
So those two boxes need to be compared. Any change occurs, those two boxes needs to be compared. What was there before? What's there now after the change? Because your current price will show the updated price, right? And so you can
Mhm.
tell like this one was done on the 18th. If you do it today, it will be done on 21st. Especially if you update any assumptions of high, low price or revenue or earnings growth. So 3 minutes or less, you can do it. Believe me, you can do it.
Yeah.
It'll take
So,
practice.
But yeah. So
so
for your own, when you study your own stocks, do you do the same thing for quarterly?
well, you got to remember, you guys are in clubs. I'm not in a club. I have my own drummer who beats slightly differently. So just kidding.
Uh,
Okay, so
Uh,
I look at return on equity, right, on a trailing
okay,
4-month
hang on. Let me
basis.
go back. Return on equity.
Trailing 4
Okay.
quarters.
Right. Now, the problem with, well, I wouldn't say problem. The challenge with this is you're not going to see return on equity on a trailing 4-quarter basis. You'll see only annuals, right?
Right.
So you have to kind of compute it yourself. There's no way out of it because SSG won't give the most recent 4 quarters ROE. They just give annuals. So what you really have to do with return on equity, you take 4 quarters of net income and divide it by the latest quarter balance sheet equity line item, and that's it. That's your trailing 12 months.
Wait, you divided by what?
The latest quarter has a equity line item balance. So you divide that by equity, and that's it.
This is described in your spreadsheet, right?
Yeah,
Okay.
yeah, it's described somewhere. I've got so many things going on. I have no clue where things are anymore. So the other thing is if you go to NVIDIA on Morningstar,
Uh-huh.
so maybe you can go to Morningstar and see like,
Uh-huh.
and then go to, yeah, key metrics is fine. And go to,
What's the
go,
ticker? NVID? No.
No,
NV,
NV
NVDA.
what?
yeah,
DA.
DA.
There you go.
Okay.
so go to key metrics. Okay, so now, okay, so this company's fiscal year ends in January, right?
Mm-hmm.
So when a new quarter rolls in and when Morningstar updates it, you'll see it will say like current, or it will say latest quarter. You'll see a new column, which is not displayed right now because you don't have an update as yet. So the latest quarter will have this kind of stuff. So go into
April.
click on profitability and efficiency. Yep. So a new quarter rolls in, and you'll see that they'll have a new column, and it'll say current, or it might say latest quarter, and that will give you the return on equity. So you may not even have to compute it yourself. They'll do it for you.
Can we take a look at Taiwan Semiconductor because that's the one Mel is going to report. What's the
Yeah,
ticker?
yeah, sure.
Taiwan.
TSMC.
It's TSM.
TSMC. Okay, here you go.
ESM.
Yeah, it's TSM.
Sorry.
Yeah.
ADR. What's ADR?
Metrics.
They have not reported yet, at least on Morningstar.
They have not.
They have
But
not.
you're going to give report today, right?
Right, but I'm
It's always
using
data
the format we have, and I could calculate the
Oh,
and
gotcha.
calculate the trailing 4 quarters, that sort of thing. But anyway,
Oh, okay. Okay.
Yeah, and the thing with Morningstar, like any other data provider, there's always delay, so it's not like instantaneous, quarterly comes out, and no, it doesn't work that way. What they do is on the day things come out, the same day the 10Q doesn't come out. There's very few companies that do that. So they wait for the 10Q because that's the official numbers reported to SEC, and from the 10Q, they suck in the data into their system so that sometime later you can see it. Only after the 10Q comes out.
Okay.
Okay.
So you have to wait a little bit. You'll see the earnings release, and you'll see all the preliminary stuff. Obviously, you'll have the earnings call. And so, in that case, you can at least listen to the earnings call and report that out if you want. But you can wait for the 10Q. There's no rush to do all these things, right?
Mm-hmm.
By the
Right.
way,
The numbers are not going to change.
No, they're not going to change. But the thing is, sometimes they don't. The numbers doesn't change, but they focus more on the income statement, and they may not give you the hard numbers on the balance sheet. So for example, some companies won't tell you how much. They might tell you how much stock they bought, but they won't give you an updated balance sheet with the proper amounts in the treasury shares line item, for example. That doesn't mean it's bad or anything. It's just that they haven't given you the official numbers that goes to SEC, which is 10Q.
you won't get that number until they do the next annual, right?
No, the next, for each quarter, it'll be 10Q, right? When it's
Okay.
annual, you'll get to 10K,
Yeah. Okay. All right.
right?
All
And
right. So the updated stock volume is in the 10Q.
right, exactly. Because a balance sheet is, you think about it, a balance sheet is a snapshot, end of quarterly reporting period, right? And likewise for annual. For the annual, it's for the whole year. So again, it's the end of year balances. So it's a snapshot. Whereas income statement is, the during the period, sales during the period, profit during the period, that kind of stuff. So unless you wait for the official numbers, it may, it may make sense just to wait for the 10Q to come out and the 10K to come out. Yeah.
By the way, on
So that's
TSM, the annual for 2024 was just issued on the day they did the first quarter for 2025. So so in other words, the 10, I think they call it the 20F.
That's correct, because
Yeah.
it's an ADR.
So that's when that final report came out, and this is April already. So
Yeah,
there's a delay.
So they're not held to the same time frame as American companies.
that's correct, which is
Okay.
rather, in my mind, is rather idiotic. So, and that's the same thing with issues with Chinese companies where they, if you're trading on our exchanges, you have to adhere to US GAAP. And some of these companies, maybe not all, but quite a few Chinese companies, particularly, didn't give a damn about US GAAP. And so what the exchanges did was threaten them to say, we're gonna get you off our exchanges, go trade somewhere else. So that's been going on for many years, but somehow they don't have the gumption to do it. I don't know why. It's one thing to have the rules and then you have to comply with it. That's it. If you don't comply, get off the boat, man. You're in the wrong place,
Yeah.
right? But the problem is they try to work it out with them to say, look, either you comply. The reason why is this financial statement is to be auditable, right, through accounting firms, and they are unwilling to open their books for auditability. So then the exchanges have to threaten them to say, well, that means you may not be complying with US GAAP, right? Or they could be hiding something. Yeah, be very careful.
So that
Does the same thing happen with American companies on other exchanges?
I don't know about other exchanges, but they have to comply with ours because the headquarters is here, right? They domiciled here, right? So because they're domiciled here, then there's an opinion letter that has to come out with the 10K. And if that opinion letter is not clean, you better believe the stock will take a hit, because that means there's some blemish in the accounting of sorts.
Okay. So for annual report, what are the additional matrix that we need to look into? Actually, I pull out the summary that Baku, you and Isla, we met.
Yes.
You give us a rundown, also talk about, look at SSG. First page, SSG, the management, which is here, first section,
Yes.
second section. And
Yes.
then you talk about focus on ROE, and then you want to actually ratio. These ratio actually is additional, which is on the Morningstar, the IORC, free cash flow per sales, free cash flow per net income.
Yes. So
You
those.
want us actually to focus on.
So there's a total of what? One ROE. There's ROE. There's ROIC. There's free cash flow to sales, and there's free cash flow to net income. That's it. You don't have to go beyond that. Don't go like all over the place. And you have to do the same thing for quarterly and annual. So you don't have to break them down. I notice it's broken down. Like you have something for quarterly up there.
Yeah, right. Yeah.
And so you have to focus on A, B, C, D. All the ROE is already there. But the D, 1, 2, 3, those things has to be repeated for quarterlies. And that's it. You don't have to you don't have to have something different for quarterlies compared to annuals, because you're doing a trailing 12 months.
Gotcha.
Right?
But these are information that we just saw. It's not in Morningstar, quarterly has not been uploaded. So we need to go to their 10Q to get that information, right?
Yes.
Okay.
Yes. Not only that, you have to go to a total of 4 10Qs, the most recent one and the previous 3. So that's what your quarterly, your trailing 12 months, right?
But the 10Q, if the 10Q hasn't been submitted to the SEC, it might not be on their website.
That's correct.
It's only on their website once they've submitted it to the SEC. So we may have the 8K numbers, their call numbers, and their earnings release numbers, but you might not have the SEC numbers.
Yes. Yeah. So the official financial statement is when the 10Q is submitted to SEC.
Right.
And when they do it, that's the time you'll see on the investor relations of the company's website. And this is all regulation fair disclosure.
Yeah. So we
right?
still have to wait for them to submit it to the SEC before it gets to Morningstar that we can see it.
Yes. So if you do the ROE, you do ROIC, you do free cash flow to sales, and you do free cash flow to net income, you do that on a trailing basis each quarter. When the fourth quarter comes, it's already trailing 12 months anyway, right? That's the only unique thing about the 10K, because now you don't have to compute all that stuff. You've got it for the whole year. So that's why
that's what's annoying about quarter 1, 2, and 3.
Exactly.
Oh, okay. Check quarter 1, 2. Gotcha. Now I understand what you're saying.
Quarterlies, you have to compute. There's a bunch of stuff you have to compute on your own.
Okay,
Yeah.
got it. Yeah, if it's you looking for 10Q,
So,
you need to check quarter 1, 2, 3.
So the point is, you do these 5 ratios for annual and quarterlies. You can forget the rest. I'm serious, because that's how you focus on your 5 or 10 minutes.
Okay.
Right.
But the
So
question
it's consistent for quarterly and annual. You're doing everything on a trailing 12-month basis.
Okay. So question is ROIC. I got the number. What does that number mean? Like, what are we looking for? Like, also trending up? Don't want trending down, or what?
Well, you want ROIC above a certain threshold, like 10% or better, or 12% or better, right? And you want to see if it's hovering around that. Free cash flow to sales, you want to see if it's 10% or better, right? So every dollar of sales, you want to see if at least if 10 cents for each dollar is free cash flow.
Okay,
right?
that's why it's a greater than 1. Okay.
Right.
And then free cash net income is hovering around 1. You're not always going to get greater than 1. It's in a range of 1 somewhere, within some range, and close to 1.
Okay.
That's good.
Close to 1. Okay, close to 1.
Yeah, so what that means is the following. Net income is an accrual figure in the income statement, right?
Mhm.
But free cash flow tells you the actual free cash after capex. In other words, the operating cash, you know, they divulge the operating cash in the cash flow statement, the first part, and then if you take the capital expense out, that's the remaining cash left. That's what the
Mhm.
free cash flow is. That's the remaining cash left, what the management can do. So what the hell are they going to be doing? Well, they've already allocated money for capex, right? And so now what else do think they could do? One of a few things. One is they could do acquisitions. A couple other things they could do is, well, it could be a dividend payer, so it tell you about dividends, or I go to buybacks. And the third is if they have debt, they could reduce debt, right? So those are the four things they can do with the free cash flow, and that's what you need to hone on. If that one, close to one, like suddenly it goes to 0.5, then you need to know where the cash went. This doesn't mean the bad thing. It just means doesn't make sense to you. You know, if they may have spent money on marketing and so on, now it shows up in the net income or something, or they may have you know, made an acquisition. So now the operating cash is not sufficient to make the acquisition. So what do? They take on debt. So
Yeah.
so that's where you got to dig into. The rest is all noise. I'm serious. So what you can do is you got A, B, C, D. That's all you have to do each quarter and each 10K. And that's it.
So if they cannot meet above 10,
Yeah. Then you have to watch it to see like what are they doing. You have to see like, okay, return on equity is net operating profit after tax divided by total capital, right? So if it goes down, you need to know why it's gone down. Did they take on more debt, or did the profitability go down, or both? Right. So you got to understand that ratio. So let me say that
understood.
again. Let me say that again.
Okay, say
Return
it
on
again.
invested
Okay.
capital is net operating profit after tax. They call it NOPAT. Okay. It's an acronym, NOPAT, net operating
Mhm.
profit after tax, right?
Oh, what's called, how to say it? Net. Oh.
NOPAT.
NOPAT,
Yeah.
Uh-huh.
net operating profit after tax.
Yeah. Divided by
Okay.
total capital. And that's
Total.
equity, but that's equity plus debt. That's total capital in the denominator. So that's all you have to keep track of and see like if it's going, you know,
Which one?
wacko. You
Debt,
just have to
debt,
decide.
equity
Uh,
plus debt.
that's correct.
Oh,
Debt.
okay.
Man, feels like a quiz to me if I know my stuff. Just kidding. Just kidding.
$64,000 question. Yeah. Okay. All right.
Yeah.
So,
Okay, same thing with free cash flow, right? What you can do is you can take the latest 4 quarters of free cash flow. And so how is free cash flow determined? It's operating cash from operations minus capex. So you find that for each
Cash
quarter,
operations minus.
capital expense, capex.
Oh, okay. How to spell? Okay. Okay. Capital expense. Yeah.
So that's your free cash flow for that period. So if quarterlies come out, you take the most recent 4 quarters. Like let's say recent 2025 quarter 1 comes out. So that's March ending this year, right? So you take Q1 of this year, you take Q1 of the previous year, not Q1, excuse me, Q4, then you take Q3 and Q2 of the Q2 of the previous year. So you take the other the most 3 recent quarters along with the most recent quarter, and that way you'll get your free cash flow added. So you need to have 4 numbers every time. That's what I'm saying.
Oh, last year 3 quarters. Compare the last 3 years quarters versus this 3 year. Kind of like last year Q3 compared to this year Q3, right?
No,
Apple
that's not the
compared to apple.
comparison.
no.
No,
Oh,
that's not
what's
the
the
comparison.
comparison?
We're not doing the comparison. We're doing a free cash flow to sales for the most recent. So free cash flow is free cash flow of quarter 2, quarter 3, quarter 4, and the New Year's quarter 1. Yeah, so let's erase all that stuff. Let me start that with you again.
Okay.
No, keep yeah, just erase all that stuff. That line. Okay, and
Oh, okay.
I'll show you how
Okay.
to, and that way you'll understand.
Okay. Okay.
Okay, so now in there, what you say is 2024 Q1. Excuse me, Q2. 2024. No, right, right.
2024
24
Q2. Uh-huh.
Q2
plus
plus
2024 Q3
Oh, got
plus
it. 2025
2024
Q1.
no 2024 Q4
Oh, Q4 too. Okay.
plus 2025 Q1. That's your most recent four quarters,
Okay.
right? So
Uh-huh.
now you got to you find the free cash flow minus capex for each of those quarters and you add them up.
Got it.
That's your most recent free cash flow.
Oh, okay. So do this for all the
Every quarter you
all
got to do that. So it's
400
going to be
quarters.
consistent. Every quarter you it rolls in, you have to do this, right?
Okay.
Okay.
In other
So
words,
now
it's not just the revenue and the earnings that we're interested in.
exactly. Yeah, exactly. See, revenue is fine because that's top line, right? But
Right.
earnings, there's a lot of wiggle room from the top line to the bottom on the earnings statement, and
A
it's
lot
accrual.
of things go on. There's a lot
And
of
it doesn't
lines.
tell you, yeah, it doesn't tell you anything about cash. This thing tells you about cash because you want to see, along with the earnings, how the free cash flow is coming along. That's all you're doing. And so
It's a trailing 4 quarters.
that's correct. That's correct. That's the same thing you do every time. And then the same thing, so that will come, the free cash flow, you do that for the 4 quarters in the
Uh-huh.
numerator, and you got to do the same thing for the denominator because it says sales, right? So the
Uh-huh.
sales should be 2024 Q2 sales plus 2024 Q3 sales and 2024 Q4 sales and 2025 Q1 sales.
Okay. And
So that goes
okay,
in the
yeah,
denominator.
basically, oh sorry. Okay, got it. Let me do this. Sorry. Let me figure this out. So basically you calculate free cash flow and then sales. You need to do all that with
Exactly.
the formula. Yeah.
Yes.
Okay. Free cash
So
flow
now,
sales. What else? Free cash
so
flow sales. Anything else?
that's it. That's for that ratio. Now you do the same thing for number 3,
Uh,
free cash flow to net income. You already got the free cash flow now from 2
yeah,
above,
just
right?
do net
Right.
income.
Hmm.
Okay.
Now you have
Yeah.
net income. So you do net income also same thing for trailing
Same thing.
quarters.
Yeah. So what I try to say is first and then net income. You just have to calculate these net income
Yes. Yes.
for the same formula,
Yes.
basically. Okay, got it. Let me do this. Hang on. Ratio basically need to okay something like calculate. Okay, got it. Calculate the following. Calculate free cash flow. Calculate free cash flow you're using. Already formula, but it's just basically it's this.
Yeah, that's just your
Um,
example. See, so
yeah, example. Yeah.
suppose
That's,
the next quarter rolls in, right? Q2.
uh,
Now you're going to use 2025 Q1, Q2, 2025 Q1, 2024 Q4, and 2024 Q3. That earliest quarter rolls off.
Right.
right, right.
It's a trailing 4 quarters.
Exactly.
Three
It's always
quarters.
trailing
So
4 quarters.
it's only the 4 quarters.
Yes.
Yeah, yeah. This
Now,
just example.
the bonus here is when the 10K comes out, when the fiscal year ends, assuming lines up with the calendar. Well, guess what? Then you don't have to add all those because it will do it for you because it's for the entire year, right?
Right.
That's the only difference. But you have to do it for Q1, 2, and Q3. Right? And you got to do the same thing for ROE, right? For ROE, you do the trailing 4 quarters of net income and you divide it by equity on the balance sheet. So ROE is the same. C.
Okay. So, okay, 4 quarters. Yeah, okay.
But just the equity that's on the balance sheet for that quarter.
Yes.
Okay.
Okay.
Balance sheet, you're not anything. It's a snapshot, right? So you take the most recent quarter
Okay.
equity. Yeah, that's all you have to do.
Okay.
Okay. So
Hmm.
I hope I'm making sense.
Okay. Yes, it does. I will clean up, make a little bit more readable.
Bakul,
Yes.
the denominator is always one number, the latest quarter, right?
Let's say that again.
The denominator
Yes.
is always the latest quarter only, right?
If it's a balance sheet item.
Yeah, like
See, that doesn't hold for 3 here when it says free cash flow to net income.
yeah.
Go down a little bit.
Because that's not a balance sheet item.
Yeah. So if you look at 3 where it says free cash flow over net income, so
Uh-huh.
the net income will be most recent 4 quarters, and so is the free cash flow the most recent quarters because it's not a balance sheet item. Any formula has a balance sheet item, regardless of whether it's numerator or denominator. You only take the latest quarter,
Yeah, okay.
right? So that's how it should be done.
Any balance sheet item.
Yeah. There are
Always take.
nuances to those, but you can ignore those. Some people say it's not a good idea to do ending equity. Some people say use beginning equity of the period. Some people say, well, forget that. Add all the equity for all the quarters, divide by 4, and
Take the
in other
average.
words,
Yeah. Some.
average it out. Whatever the heck you do, be consistent. That's all I need.
Mhm.
Yeah,
Yeah,
because
so
there was a point of contention many years ago. I mean, 2 decades ago with BI investors. Because some people said the return equity doesn't match. So then some people dug into that and said, okay, one data source used beginning equity, another one used ending equity, and the third data source used average equity between the beginning and ending period.
Mm-hmm.
So then the
here
conclusion was, whatever the heck you use the same
Use the
across.
same thing all the time.
Right. Don't mix your data or do switch the formula in the middle of something. That's all.
Okay.
Here the latest quantities are invested capital, free cash flow, and yeah, those are the 2 latest quarters. Okay.
2, 4.
Yeah. Free cash flow is the latest 4 quarters, right? Invested capital is the latest quarter because again, debt and equity are balance sheet items.
Yeah.
I don't know why there's a comment about compare above matrix with industry average if possible.
Too much
Do we
work.
really do you
Get rid of
care?
it. Too much work.
Okay,
Get rid of it.
Okay. But we could use AI to get some additional information. I don't know what kind of information, like any good news, bad news, or
Yeah, no, you can do
what
that.
kind.
That's all additional stuff. But the whole idea is to stick to
Uh-huh.
this. Get good at
Okay.
this first. You can always do the AI
Okay.
stuff,
Mm-hmm.
on the side.
Yeah.
You can make AI as an education item each meeting because it's becoming very useful for all kinds of things. So what you can do is the whole, all members can kind of explore AI and then report back to the club to say, oh, I learned this using this AI tool and so forth. Okay.
Right. So, for example, I can say, hey, calculate, just give the formula for this company and gave me the numbers.
You
You can
can,
ask
but you still
AI
have to
to do
fact
that.
check it. You can, but you still have to fact
Oh,
check it.
okay, fact check. Okay.
So
Okay.
like it'll give you a number, but then you have to go to the 10Q for the Q2 in 2024 and see
Mm-hmm.
that the number it's picking up is what is correct. And then you have to go through each of
Mm-hmm.
those and see. And so it's verification. I mean, you got to do verification regardless.
Mm-hmm.
Yeah.
Got it. Okay.
So yeah, you can use any
Okay.
tool you want. You just have to make sure you fact check it and then it's not
Yes.
erroneous.
Yes. Yeah. That makes sense. Any other questions for Baku? Mel, do you have anything?
No.
You know how, Mel, you actually had some comment last time. I wish Henny is here because Henny also have a long checklist. So I don't know
Is
where
Henny
his
on travel or something?
Henny is putting his grandkids in bed.
Yeah.
Oh, okay,
Family
okay.
family matters.
Oh yeah,
Yeah,
family comes
because he's
first.
in Canada. They are already late.
Okay, okay.
Yeah. He has. Okay. I think my recommendation just follow Baku's guidance. Just practice all just these matrix and get very. And then we can move on. See anything else we want to do.
Yeah.
Yeah, so what I'm
Okay, very
proposing
good.
is, yeah, what I'm proposing is
Mhm.
always have an updated SSG and then use those 4 ratios, and the rest is all additional information if you desire in the future. And that way get used to reporting the same format for everybody.
Yeah.
And that way you can you stick to the important stuff first, and then you can always report any other additional findings.
Yeah.
And there's a lot of
So
things
the
going on in the
findings.
quarter.
Yeah. Exactly.
But cool.
Go ahead, Piero.
Yeah, I was going to ask a question about keeping the SSG up to date. For
Okay.
example, you were talking about sales, the importance of, sales is as kind of the first indicator, the most important thing, because everything flows from sales. For example, here it's sales, way over on the right, it says near the bottom, 125, 206, 194, 152, 114. Okay, if we see sales going from 208 to 205, do we have to reforecast our growth rates?
No.
No, because the numbers are so close.
Yeah.
Yeah.
But that's
if
just the percentage change. That's not the actual number. That's not
That's
the
correct.
actual dollar.
Just yeah,
That's
the
just the
actual dollar
percentage
value is on the
change.
left side.
Right.
Yes. But
That's not the actual dollars.
Okay, but if you see the sales figures differing, say, from 70,774 to 79,500, there is no difference there. So you're not going
Yeah.
to recast anything.
No, you don't recast. I think
No.
what you can do is you can say, you need to have a criteria. You meaning the club needs to have a criteria to say, okay, anytime sales go down or trends down by 10%,
10%.
right?
Yeah.
Or 15% or 20%, depending on what kind of company you have. It doesn't have to be same percentage for every company, because this, this is a rocket ship. Let me tell you, NVIDIA is a rocket ship, right? And so, and the downtrend percentage for this company would be different from other holdings downtrend. So you can't use this, make a blanket kind of threshold to say, if this thing is down 10%, and then go to another company and say 10%, because the other company is not a rocket ship, right? So your threshold for that would be different for recasting, right?
Yeah.
That's like in budgeting, you have to re-baseline when you're so off, like offbeat of some sort in either direction. You have to re-baseline your budget, right?
Yeah.
And so
Right.
instead here you have to decide at what point do you redo your forecast, because you're trying to see, like if you say 15% growth of sales, 15% growth in earnings per share, how is that coming along, right, with the actuals? And so if you're off a little bit, that's fine. But if you're way off, then you might have to revisit it, right? To say, oh, maybe I was too conservative, or maybe I was too aggressive, right? And you just need to get the feel of that for each company.
Okay. So a 10% swing either way, if you kind
Yes.
of you underestimated and it keeps outpacing your estimates by 10%, maybe you should upgrade your estimates.
Yes.
Yeah. And if it's the same within the downside.
Yes.
Now, like is every quarter, like if suppose you have a miss in one quarter of about 5%, not a big deal. A second quarter, 5% miss on the downside, not a big deal. A third quarter, 5% miss on the downside, then it becomes a big deal.
Well, you got to make sure you're comparing trailing 4 quarters, not individual quarters, right?
Yeah.
And the reason is, if you do it individual quarters, quarter by quarter comparison, it's very volatile. You're going to get stopped out of something. You might sell something you shouldn't be.
Okay.
So,
Well, using this company's example, right? It is trailing down for sales from
that's true, but
200% to
that's percent.
194.
That's percent change. But look at its sales on a trailing 4 quarter basis, right? You're looking at just look at 723, the year 23. It had 11 billion in sales. Excuse me, and not 11. I'm looking at pre-tax profit. Okay, 32. Then suddenly in like almost 2 years. In 2 years, it's almost double, 32 to 60.
Oh, gotcha. I understand. Okay.
We're looking for doubles
Oh,
in 5. This darn thing is doubling almost 2 years or something like. So, like I said, it's a rocket ship, right? So you want to give it a chance to continue its growth path, right?
I want to understand this percentage. Are you saying this is a percent change?
On the
Percent change
trailing,
is
Yes.
downward trailing quarter or trailing
yes,
12 months.
right?
But I try to understand how I'm looking this. So I'm trailing quarter percentage change going down, but you look at the sales is up.
Yeah. So what you might
That's a
want to go ahead.
Go ahead, Bikul. Yeah.
Yeah. So you might want to go to the quarterly and add 4 quarters, and go to the previous 4 quarters and add those and see if the percent change is correct on the right side.
Okay, adding these four. Okay, because that does not really make sense, right? Your change is down, trailing, and local sales is up. Local sales up here too, quarterly. 26, 56, 56, 40, 106, 106.
Yeah.
Okay, we have about 2 minutes.
140.
Yeah, somebody
Yeah,
have to fact check these numbers to say that the numbers are correct. So
yeah,
Okay.
yeah. Okay, all right. Okay, so Mel, do you want to practice your Taiwan semiconductor using Baku's guidance recommendation just for practice for tonight, giving your report?
I can't do that for tonight. I'm prepared to give a quarterly report for TSM.
Oh, sorry, TSM, sorry, my mistake. Yeah, that's what I thought, right? Is this for
Okay,
tonight?
so yes, I think we need to take some time and
Mhm.
acclimate to what Bikul is saying here for the future. But for tonight,
Okay,
I have a report that I'm sure will be less than it could be 5 minutes. So but it's going to be the old format, and we need
okay,
to study about what kind of format we want in the future at some other point.
okay,
Right.
okay.
Yeah,
What about you, Nina?
we need to discuss this a little bit
Yeah,
more.
we need to move on.
Yeah.
Okay,
yeah,
okay.
so
So,
it's just a recommendation I'm making and
Bakul,
see how
thank
that
you
works
very
for you.
much.
Sure. All right.
Yeah, thank you so much, Baku.
Sure. If you have any questions, let
Okay,
me know. All right. I'm
okay, we will.
gonna leave. Okay.
Okay.
Bye, everybody.
Thank you.
Okay,
Thank you,
Thank you.
thank
Thank
you,
you.
Bikul.
Okay. Bye.
Thank you.
Okay, all right. So, all right. So back to our meeting agenda.
Now
Okay.
time for the quarterly reports.
Yeah.
So Mel, you can go ahead with TSM.
Okay, I'm going to give him the access, make him presenter.
Okay, let me see. Okay, here is the standard quarterly report. By the way, peer reviewer, we might want to discuss that in the future. Before a meeting, maybe there's another person you talk this over with, and they could play devil's advocate. That's for another time, though. So as I go through this, this is the quarterly report, not the annual. I did reduce the EPS growth by a point from last year. But the bottom line is that TSM has had a really great quarter. Okay, year over year sales growth, 35%. EPS growth, this is just a continuation of the performance that they've had in the past. I'll note though, however, sequentially, they dropped a little bit, and this drop was basically due to weakness with Apple. Okay, and I'll get into that in a minute. The current PE is 2021, average is 22, so this for the SSG, this is somewhat fairly valued,
Mhm.
but the stock price has really plummeted so that the upside down ratio is 6.3 to 1. Compound annual return. I put down both the one based on high PE, the one based on low PE. And if you want, I can put up the SSG a little bit, but I thought what I want to spend my time on is just some of the things that came through on the presentation. Okay, so second quarter guidance, they don't do EPS. They focus on margins and revenue. Notice the revenue, 28 to 29. The previous quarter was, well, the current quarter is just 25. So they're projecting increased revenue. And according to CCY, the CEO, this is driven by demand, basically from the United States. And it's not, as rumored, stockpiling to avoid tariffs. Now that still may be happening, but according to the CEO, it's not due to stockpiling or pull-ins, as they call it. It's due to the increased demand. And then I referred to other information that's pertinent, I believe, to any decisions we want to make. Certainly, in my opinion, the data center build out continues despite everything that's happening. And I don't know if I'll have enough time to show a pictorial of how TSM kind of stands in the middle of this pyramid of basic monopolies in the build out of the data centers, plus all the other things they do. For right now, let me just go down and discuss some of the things that came up. Morningstar is really good at coming out almost immediately with an update of their take on the earnings call. And what they did, 417, okay, they maintained their 5-star rating, but lowered the fair value because in spite of the revenues increasing here in the coming quarters, they're projecting the 2026 revenue and EPS growth will subside due to tariffs. They also downgraded the capital allocation from exemplary to standard. TSM committed $100 billion for further lab build out in the US. And in Morningstar's view, it's more economical to invest in the Taiwan facility. So they use that to knock down a capital allocation from exemplary to standard. Value line went from indexes 122 to 322. They kind of always reflect whenever the price goes down, they kind of like follow suit. So I don't know the significance of that. But certainly they said investors should be patient and they look forward to a solid recovery 3 to 5 years. I already mentioned sequential revenue decrease of 5% due to weakness in iPhone sales. Here's a statement from the CEO. AI-driven demand, mostly from the US, accelerates revenue compound annual growth rate to 45% over the 5 years. So he sees this thing continuing.
He's an idiot.
No collaboration with competitors. Well, I wanted to put that in. There was push by the Trump administration to see if they can, I guess, help bail out Intel. I think that's going nowhere, but that's always a threat, I believe, because Intel is a U.S. company, and everybody, I guess, wants to see it succeed. But right now, CCY wanted to emphasize no collaboration with competitors at this point. They're going to speed up the Arizona fabrications. Margins are going to decrease because of this build out. And the question posed by the analyst was, okay, are you going to increase cost to cover the decrease in margins. And what the CEO is saying in their discussion with their customers, I think basically to swallow the increases. New technology will be tried in Taiwan first, then the US. So yeah, they're doing a lot of building in the US, but Taiwan is the center of all leading edge R&D. So we have to keep that in mind. Somebody said, why don't you buy back shares? TSM said, nah, we're not going to buy back shares. Any give back to investors is going to be dividends. And there's chatter that you get in the earnings call. Apparently, there's some kind of China water ban. I have no idea. I haven't investigated that. It didn't impact things. Earthquake. I guess there was an earthquake. It's not the same earthquake that hit Myanmar. And then somebody said, well, what are you doing about tariffs? And the CEO emphasized they are not involved in tariff discussions. This is strictly between Taiwan and US. So that's my report. That's what's going on with Taiwan Semiconductor. And I think, putting more money in is an appropriate thing to consider. Any questions?
Are you going to show SSG?
Do they
Yeah.
manufacture their chips in this country or in Taiwan?
Repeat, please.
Do they manufacture their chips here in this country or in Taiwan?
Well, both. As they're ramping up their facilities in the U.S., right now they're stamping out chips basically for Apple, but the advanced chips, you for NVIDIA and for training purposes, that's in Taiwan yet.
And
Mel?
do we,
Jane
and
was
so we
asking.
use, so there will be some problem with tariffs.
There could be. And that's why I think TSM contributed $100 billion. They're looking to, they want an exemption, okay, in the future. And so, hey, they out of their own money, they're going to invest $100 billion more. That's to show Trump that, they're trying to onshore production here, and that maybe this will end up as being some relaxation of tariffs in the future. But we don't know what's going to happen with tariffs, okay? So, but that's the purpose of the $100 billion. And tariffs, yeah, they could, they could hurt. I mean, because, the chips go to Foxconn and other places that assemble things together, and then they go back to the United States. If you recall Hanny's diagram showing how you go from one country to the other country, and it looks kind of messy, except when you do the math, that it's cheaper to do it that way. And all of that is now being brought into question with these tariffs. So we don't know the future. But again, in my view, for everything I've read and just listening to CC Wei, Taiwan Semiconductor is, we want to really keep that in our portfolio and take this time to add to it, in my opinion.
Mel, could you show us your SSG, please?
Jane's asked you to show SSG, Mel.
Oh, okay. I don't know if I'm still on, but let me. Can you see my
I can show
SSG?
you. Let me see.
Yes.
Okay, very quickly. EPS long-term estimate 16.6. You know, the earnings estimates going forward, I looked at, I guess, 4 different analyst projections, including Seeking Alpha, Zacks, and all of that. And these numbers range from 16.6 to all the way up to 29. And I lowballed it, okay? I mean, this is, you know, and this is also consistent with the historical EPS. Just quickly, you know, our pre-tax profit on sales, 46%, almost, it's greater than 3 times what we consider to be a threshold. Likewise, return on equity, double what we would consider a threshold. And if you look at this, there is just a modest debt, and it's going down. So in that respect, everything is looking good. And this is one of the few growth companies where the PEs are relatively stable. And so I just used the average 5-year averages. I did cross out to 9.2 and use that to calculate the high price. Low price, I went, I think 80% or 20% below the current because we had kind of a rather big drop. And what this ended up doing is giving me the 6.3 to 1 upside downside ratio. And this is a current of 418. I didn't put in today's price. I think everything fell today. So the upside downside is probably even lower than that. Let me quickly just go to the quarterly data, and you know, this is okay. This is trailing 4 quarters. All right, so we're looking at smooth data, and look at that. I mean, this is going up in spite of everything that's going down. You know, we showed NVIDIA that's beginning to kind of like turn over. People might not want or need NVIDIA's super chips, the Blackwells, but somebody has to stamp out the chips, whatever chips they're going to be using. And that's this company. So things look, in my opinion, pretty good. Any questions on SSG? And by the way, sentiment, you know, I compared it to the sentiment a lot of people are doing or analyzing Taiwan Semiconductor, and you know, my numbers are pretty close. Everybody else, I'm kind of like right there in the middle. So excellent company.
Okay.
Mm-hmm. Did we just buy some last month?
I believe we did.
Can we, during the buy sell, we can discuss, you know, Kenny was saying we need to sell one company. I have something in mind
Right,
to
because
sell.
we have to
And then if
first
we have the
pay out.
money,
We
Pay
have
out
to do
Joanne.
some selling. Yeah, we have to do some gyrations here after
Right.
We have
we
to,
get
we have
done
to
with
pay out
presentation.
Joanne. We have to pay
Yeah.
out Joanne first before we do
Okay.
anything else.
Yeah.
Okay.
Okay.
Okay, thank you, Mel.
Thank you very much, Mel. Thank you very, very much. So who's next? That would be, Nina with Google.
Nina was here, but he must go. Yeah, he signed off.
He is gone, so we do not have that report. Okay. All right. So the next thing would be the open mic for our guests. So Jay, can you?
Yeah. Isla, if you click attendees, you can see what I can unmute them. You can just go through the names. If you click the attendees, did you see?
I have attendees. I do. I have them. I can see them.
Can we just? Okay, I can unmute them. Okay. Go ahead, Isla.
Okay. Brian Koenig,
Yeah,
Are you there?
great meeting. Bakul is always a good person to have on there. The one thing that I'd like to remind what he said for the quarterly reports, maybe keep those simple. But I know as a model club, it's kind of your responsibility to dive a little bit deeper. And so what I might suggest is to pick a stock ahead and kind of move it around between the different people that only do one in-depth review at a meeting, and then just do the quick ones otherwise. That'll spread it around and keep the meeting going. The part about prices and when to sell or when to buy, I'm trying to come up with a one for using the 52-week high and then decreasing from there, depending on what's going on, say 10%, and then use those not as a buy or sell point, but as a discussion point. If it gets there, discuss, do we want to sell some? Do we want to keep some? Is it a time to accumulate? And just use those as discussion points, not an automatic buy or sell. And then I put a couple notes in there. The company, when they send out their 10K, it's about 45 days after the end of the quarter when they send it to the SEC. That's a 10Q. The 10K comes out about 65 days afterwards. So when you're looking at value line and CFRA data, and you're doing it for April, the value line comes out in April. You've got the data from December 31st that you're looking at. So that is at least 3 months, if not 4 months old data. So that's when Bakul was saying, get the 10Q or look at the quarterly reports, because as soon as those come out, the quarterly graph will give you a lot better idea on that. And I think the other one I had was, that was just about the model club. Anyway, excellent discussion. I was glad I got to do it. And you guys are doing a great job as far as I can see. Thank you.
Thank you, Brian. I have a question. When you say give depth review, what else do you think we should, what else do we miss that you think we should provide in our review?
Is it an investment club?
Anyway. Yes, you make a comment, you said that doing an in-depth review. What do you mean by that? Can you elaborate on that?
Well, if I understand it, the model club is supposed to, when somebody gets into that, they should watch the how you conduct the meeting, move along from the treasurer's reports and minutes and all of that. And then when you get to the annual, or, I'm sorry, to the company reviews, you should put on a presentation so that somebody looking at it will see a different way of getting into the data to analyze a company on a periodic report. That's why I say if you just decide to do one of these, the in-depth like Bakul did, and you get way down in there, and then just do the quick ones, because most people in a meeting in an investment club are probably going to use the short one that Bakul was talking about, the 4 or 5 data, but they do need to see the real digging into and using the all of the parts that Bakul said. Did I answer your question?
No, really. So I want, yes and no. So I want to talk about, when you say give a company, when we first time present a stock, we do give a depth review, like how do they make money, what's the business, who's the competitor. We, as a presentation, we give very depth review. So as quarterly annual reports, we have noticed we took so much time, sometimes 25, much longer time. Each person is different. So we try to streamline, like as an investor, I understand where as stocks, the model club, we need to show people how to do things. But also as best practice, as an investor, what are the things we need to looking at? to help us to evaluate this company it will reward us, when to sell, when to buy. So I just kind of try to understand your comment about pick one stock, do an in-depth review. I try to understand what do you mean by that.
Well, the gentleman that did the last report, using your report form, I think that's the short report. And what he did was just the last quarter to this quarter, last year to this year, and then at the end there were, I think, 7 or 8 items that he thought were very important to go forward. So I think that was probably a good report to use as a template for going forward. And I'm just saying that there was a comment during the meeting that you were going to have somebody do an in-depth report at the next meeting. And I was just going to say that if you do that, I would just suggest to pick one ahead of time and have that person, maybe take a couple months and know that they're going to have to do that report, and maybe do a little bit of work and then send to Bakul and have him give some guidance too. That's what I meant with that. The quarterly report that was given in a report form. I think that would be the about what Bakul was talking about.
Okay, gotcha. Thank you, Brian. Yeah.
No problem. Thanks again.
Thank you, Brian. Okay, can we unmute Helen Albanese?
Helen self-muted.
Oh, so Helen,
Oh,
there you are. Go ahead. Go ahead.
Hello, thank you for your meeting tonight. I don't have any questions, but I do look forward to receiving the chat GPT instructions on how to analyze those things quickly and set up bullet points from those analyst calls. Thank you.
Okay.
Okay.
Mel, can you please upload when you have a moment, and I can send it to Helen right now. I just sent you the link in the chat where to upload.
Okay.
Okay.
Wait, can we do that later?
Yeah.
No, I'm asking Mel to do it right now, and then because I need to get Helen's email. I'm just saying as we go through the comment, Mel can upload it. I'm just saying. Yes, we can.
Okay.
Kent is
So
self-muted.
Self-muted.
Well,
Yeah, he is.
I was going to type out the question, and I was wondering it because due to some technical difficulties, I got in on the first looked like a good discussion on the impacts of tariffs, and I would really dearly love to see that presentation. And is it possible to get the recordings? Or actually, are you recording the meeting? I didn't see that, but anyway.
We are recording, and we will be posting it to YouTube.
Awesome. Thank you. Yeah, because that was I got in on the tail end of that, and it looked. I actually understood more about tariffs in that 2 or 3 minutes than I have the entire last
6 months.
Yeah, thank you.
Yeah. That was excellent.
Yeah.
So that's all I had to say. Thank you very much. You all do a great job.
Thank you. Thank you, Ken.
Thank you.
So Ken, by the way, is on the online chapter. Ken, you should get a credit for visiting our club.
That's right.
Thank you.
One of the things you have to do.
Yeah.
Okay. Thank you, Kent. Margot Taub, are you self-muted?
Yeah.
Margot?
No question.
There she is. No question.
There she is.
No comment?
No comments. It was all good.
Thank you. Okay, Sam, self-muted.
Okay. Sam Akambami, are you self-muted? Looks like you are.
Yes. Oh, nope. Here's Sam.
There he is.
Hi, Sam. Do you have a question or comments? Oh, maybe he doesn't have a microphone. You can put it in the
And what
chat
if,
if, yeah.
right, you can type in your question if you need to under the questions panel.
Okay. All right.
Okay, so that is it
Tyler.
for our guests.
Yeah.
That is it for our guests. Now, here's the thing.
Okay.
We still have club business that is supposed to go for 30 minutes.
We don't need it. We can get it done.
We
Let's
can do better
see.
than 30 minutes.
Yeah. Well, 5 minutes stock report already done
Well,
because that's
here's the problem. There's a couple of people who aren't here. Annie's not
yeah.
here.
Oh yeah.
So the full discussion we can't get everybody's opinion. Let's put it that way.
Yeah. Yeah. By the way, this link is from TikTok. I think Helen mentioned that from Ken Kavula, 5 minute how to give 5 minute report. Ken Kavula talk about it. So that's the link is about.
Oh, that's wonderful. Great. That's great.
Yeah. Yeah.
That
Yeah.
is great.
We can discuss, maybe roll this off to next meeting, like if we can ask Henny to listen to Bagu's talk, and
Uh-huh.
then we can come together next meeting
Will we have
to,
time next meeting? Next meeting, we may have more quarterly reports.
yeah. What do you
We
think
may,
about that?
many more companies will be reporting between now and then. So we may have more quarterly reports next meeting.
Yeah, so what do you think about that? We can talk about, finalize our approach, how we do things. What do you guys think,
We're gonna
Jane,
have to
Chris?
have that. We're gonna have to have that discussion with everybody.
Yeah, right. Piero, ready, everybody chime in.
Yeah.
Okay.
So the only other thing I can think of is if we have, and I'm sure we do, if we have a bunch of quarterly reports that will be coming due in May, that we might have to consider extending the meeting by 20 minutes so that we can really get a good discussion going about the quarterly and annual reports.
Should we
That's very
take a look?
that's difficult to do for some people, I know, but I'm trying to figure out how we could have all of our quarterly reports that we need to do and have this discussion since we're missing people
Right.
now.
Yeah, yeah.
I think we have most of the people here, right? Can we discuss now and then have Haney give his feedback or input
Sure.
later?
Yeah.
How
Otherwise,
about,
we'll postpone.
how
Yeah.
about picking a time, maybe outside of our regular meetings that, a number of us can get together and discuss this?
Well, we can discuss now and we can have Haney's feedback or input later.
Also,
Yeah.
Chris will not
How
be
about,
available. Chris will not be available.
Christopher is not
okay.
at the orthodontist, but then I think we
Right.
can
He'll be
have a
traveling,
discussion.
so
I'm
Yeah.
here
Oh,
right now, but
Oh,
Chris
okay.
is right here.
yeah,
So
he's
how about
here
this?
now.
How about this? We spend the next maybe about 5 minutes, just quickly get some feedback from everybody. What do you think?
Okay, go ahead.
Okay.
Can we
I'm
discuss
going to start.
now?
Okay, go ahead, Jenny.
Yeah, let's start it
I
now.
don't know. My quarterly reports are usually very short, so I don't know what to say.
Was there anything said? Was there anything that Bakul said that you don't include in your quarterly report, or
I joined kind of
things
like
that you
halfway,
put?
so I missed a little bit of it. I might need to go back and watch
Okay.
it.
Okay.
Right. I listed what need to be included. What he's saying, the first time he told us that actually these ratio doesn't have to be in quarterly, but then later on he said tonight's meeting, he's saying just keep at the same habit. If every time you look the same ratio, quarterly, annually. Last time, Isla, when he met with us, he did not say we need to do the ratio for quarter, but tonight he did. He said just do the same thing for quarter and annual. First of all, what
Yeah.
I try to say is, I think we don't need to waste our time to complete our current template. I felt like a lot of information you can just get them from SSG. No need to complete the actual, fill out the
Template.
actual form template.
Hmm.
I think I vote for that because we just focus on.
Well, what about if the person who's presenting feels that they need to change the estimate or change the PE?
Oh, yeah, what's before and what's the, make a note,
Yeah,
what was before, what was after, right?
yeah,
Okay,
yeah.
so do you agree that no
So
need
that
to
will require
complete
a little
the
explanation for
template?
sure.
Okay,
I
I,
would think
Rudy and then-
some of the parts of the report, the quarterly evaluation report, are still helpful, and we should keep some of them. And of course, it will take a little bit of time to fill out based on the SSG, but I don't think it will take
Right.
a lot of time. But
I
whatever
agree.
Baku asked to include the cash flows, those are not included before, and we have to dig it out even outside SSG. We probably have to look it up in the earnings announcement or the 10Q sometimes. So I think
Yes.
those should be included in the report. So we can use the report, current report, as a skeleton, and then we can add in those. But then for those numbers that probably are not really, mattering to us, then we can delete those. But I think for the last quarter and this quarter, the comparison, I think is still necessary. Because
Yeah,
yeah,
want to see
document last at current quarter changes, right? If there are any
it,
changes, document.
it sounds
Yeah,
like
I mean,
what he's advising is just looking at the numbers and then the SSG. But there's,
Mhm.
all the other things that are discussed, like in the earnings call, the context of what's happening. What do we do with that? Do we just look at the numbers? I mean, that's kind of like what I was getting at from his discussion.
It's assuming it. I think what he's assuming is that for the most part, there's no bad news.
Yeah.
Well, there is always news. It's either good news or
News, right?
bad
But
news.
there's no bad news, so there's nothing we really need to explain. It's going along as it always has, and so these are the numbers, and I think that's what he was assuming. But if there is any bad news, like the share price drop, like the CEO was pushed out, like whatever, and like all of the things that you explained relative to Taiwan Semiconductor, that stuff's important to know
Right, and I
going
think the
forward.
time that I took was probably over 5 minutes, but it certainly was less than 10 minutes. And
It was less
so,
than 10 minutes.
and I could easily squeeze that down to 5 minutes, and maybe just have the 5 top bullets, and then refer people to the folder in our Google Drive if they want more detail. But I need some time to think, to kind of think in my own mind
Yeah.
how we would use the information he was suggesting. I mean, he's really fixed on the return on investment and all that, and I understand that. But are we going to make decisions based on that? I don't know.
Well, the
I
other
just
thing
have
is
to.
Those are just a matrix. Those are just matrix.
Right, but we also have to think that we will have guests, some of whom are beginners, and some of whom may be trying to learn how to look at a company and how to analyze a company. So if we skip over a bunch of stuff, we may be doing them a disservice. We may also be doing a disservice to anybody who's considering joining the club and is not up what they consider to be up to speed.
Yeah,
and
this
also
could
it
be.
would do disservice. It could be disservice to us ourselves, because
True.
if
Thank you.
the follower already has gone through the 10Q or those earnings call, and they notice something, and they should put it down. And they may not
Yes.
have to voice out, but it's already in the report, and we can refer to. And of course, the presenter can highlight some of the things which are of quality. I think we cannot just look at the metrics. We cannot just look at the ratios, even though I'm an accountant, but we cannot just look at the ratio. We have to look at
Right. Right.
the prospect, the strategy of the management, and we have to look at how they present it in the earnings report. I mean, the earnings call, and those
So
non.
that's okay. So if you look at my notes right now, I'm kind of like Mel just did it tonight, right? He wrote down some comments from earnings call, present top news updates from earnings call, right?
And also,
So
in the past, it takes so much time to analyze all this earnings call and earnings report. And now we have AI to help, and we should take advantage of it. And I think the presenter, I mean, whoever follow the company, have to do a good job going through the earnings call and everything, and then use AI to summarize everything and put it down in the report.
sure.
Yeah, that sounds good. Yes, I agree. Whatever can make it easier. The presentation itself can be short, but the research that goes into making it short should be, as you said, on the drive and available to anybody who wants to look.
Exactly.
I do agree with.
It's a tough thing. It's a tough thing to think about. I think we're not going to be able to make a decision tonight. It may take, a couple more meetings for us to come to a consensus about what is really, really important and how much we're really willing to do,
Right.
I
So,
do agree with Baku, though. I'm looking at our current quarter and annual report, those data, it is redundant. These data are on SSG. I'm just saying, yeah, sure, we should not not necessary to waste our time to fill those numbers out. If you look at the
But you
form,
know
these
what?
numbers do not make.
That data that's on the SSG is mostly annual. And, we may be missing some things that are going on quarterly.
Sorry, what I'm trying to say is like, let me just go to template. Just very quick, just give me 1 minute. Like, for example, where's our quarterly annual report? Doesn't matter. Annual report works. Okay. So what I'm trying to say is these stock prices, we don't need it. It's on SSG. Ratios on SSG. These information on SSG. What I'm saying, revenue, current assets, liability. So these are the information we basically go look at the SSG, fill out, or whatever, Morningstar or Value Line. These information are on the SSG. Does not have to waste our time to fill them out. That's what I'm trying to say, including here. Unless I do agree that somebody pointed out, say, hey, if you make any changes from last SSG to this SSG, then you need to document. Why did you make the change? Why did you change your projections from 15 to 10, or vice versa. So these are the information, diluting shares, they're all on SSG. We don't need it. Like all this, I'm just saying we really don't have to spend time to fill them out. That's what like any mergers, acquisition, those kind of things we can point out when you give the report, just like from earnings or from a company you follow, say, yeah, they have acquisition this year. That's why they have higher debt or something like that. I try to save us time to maximize our time in research and document. It don't have to be very formal. That was just my take. But don't want to miss any critical assessments for the company. That's just my take. But I also agree with you, like we can practice on it and figure out, what's the best way to present it.
It's going to take several discussions to get there.
Yeah, so just give a try, because in the last couple of meetings I have noticed it is very long and I'm just zone out. I'm just like, oh, okay, I suggest just give a try, and then we figure out what's the best way for us to do things. For example, Mina's behind in reports. Probably he just, oh gosh, I have sometimes I feel that way too. Man, I have to fill this out, you know.
I think we can delete some of the sections, but some of them should stay. And also, I think it's important that whatever changes you are going to make, we should also put in a template. So everybody have a standardized form to use.
That's what Henny tried to do. So he come up a checklist to say, hey, these are the checklists that you want to make sure you are, where you do a report, go through these other things. He was working on that. Yeah. Mm-hmm.
Yeah, but the checklist
I
is
agree.
great, and we should put
Yeah,
into
I
the
agree.
template. Yeah, report template.
Yeah. Okay.
And then some of the sections like balance sheet, I don't think they are on SSG. So I don't
They're
know
not.
what balance sheet. Yeah, I don't
Yeah,
think
the only thing
so.
the SSG
I
is
don't
about the income statement. You know, it's not about the balance
exactly.
sheet or the cash flow statement.
Yeah, exactly.
Mhm.
So I think those we should have it still in the report and add in more free cash flow, all those ratios, if you think some of them are important.
Mm-hmm. Yeah. That's just a practice to, give a try, different ways how to do it. Like Mel was saying, like, we figure out. Yeah. Since we're talking about report, you know how we did the Baku 5321. I feel like
Yeah.
that's the next level. I think at this point, can we not worry about that?
Mm.
Well, you can if you want. Not everybody savvy enough can do that. I felt.
Well, I'm thinking let's get this other part done first,
Yeah.
and then we'll come back to this
Okay. Sounds good.
because that helps
Okay.
us. That actually, the 5321 helps us to dig into the balance sheet and the cash flow statement a little more. But
Mm-hmm.
you know, first we have to figure out the basic information, just like Jane said. What do we want to put on our template? What exactly do we need to know?
Mm-hmm.
And once it's out, then if we need to then go, because we may end up putting some of the 5321 stuff in there anyway. So we'll see what needs to be done after that.
Okay. So I can send email to Henny after the meetings to tell him what we suggest him to do, listen to Baku's talk, and then
Right.
each of us
And
practice, think about how we're going to present a quarterly report, and then see if we can come up a
would he
new
mind
format.
sharing his template? Would he mind sharing his template with us? or whatever
He
what it
did.
is
He should.
uses? When
No,
is that
should.
on the drive?
Right here.
That's a
It's on the
checklist.
drive.
It's a
Okay.
checklist.
Oh, he has a
Checklist.
checklist.
We are
Okay.
talking about a template, a report template,
New template. What
revised
needs to be
template,
revised template.
a revised
Okay.
template
We mean
for
revised
both
template.
quarterly, for both quarterly
And
evaluation and
quarterly and
annual
annual.
evaluation.
Yes.
Okay, got it. Okay. All right, and I will CC to the club so everybody a copy, knowing that what we're talking about. Okay. All right. All right. So do we need to vote? Next thing looks like a vote.
Oh, right. We have to figure out what to sell.
Yeah, I want to make a motion.
Yes.
Because Joanne is following Schwab, because I don't know who has Schwab. We can either figure out. I want to make a motion to sell Schwab, use that more money to pay out Joanne. Whatever rest left, I recommend to buy Taiwan Semiconductor, if there's money left.
Why do we want to get rid of Schwab?
That's
Well,
one of
we
the
need the
ones
money.
that's one of the ones where we had
Yeah.
over 100% gain.
Right. I don't know, as opposed to trimming Meta a little bit more, trimming Google a little bit
Let's
more.
take a look. Yeah, let's take a look. You're right. Did we sell the IPR? Did we do that? IPR?
I think we did.
We did? Okay.
I think we
Hang on.
did.
Let me look the.
We have to go to.
Sorry, I have not been the. Yeah, where do I go? Let's go to, is that accounting? Okay, no, reports. Ready, are you there? Where do I go?
Yes, I'm here.
Okay, if I want to take a look at portfolio, which one am I looking at? EPS growth? No, what am I looking at? If I want to take a look at the club
Hello,
portfolio,
I'm here.
which one do I
Well,
select?
the
Oh, right here.
The treasurer's
No,
report? You
that's
want the
not it.
treasurer's report?
No, I want to take a
how
look at our
about the
current
value? How
portfolio.
about the valuation statement? How about the valuation statement?
Where is it? Oh, right here.
Your portfolio, yeah, there we go.
There you go. That's what we want to take a look. So Amazon owns 5% gain. Oh, so ASML still losing money.
Wait, where is it?
Gain. Look at my screen. Oh, it's under valuation statement. I agree with you. I see what you're saying
Where's the valuation
because
statement?
Meta
Under portfolio?
under monthly. So click reports, and then on the reports on the left-hand side, there's a monthly and there's a valuation statement. If you look at my screen, I will point to you right here. So I
don't see
see
your
what
screen.
you're saying. Oh, you don't see my screen?
Oh, there it is. I'm sorry. I got it.
Oh, okay. So Meta is 182. We're losing money on nice paycheck.
We're losing money on
Schwab
ASML
is,
and we're losing money on NICE.
yeah.
ASML
I
and
see what,
NICE.
okay. So, okay. Percent-wise, it's pretty even though. About 5 to 8%, 10%. Oh, Vertex is about 10%. Okay, I'm fine either way. Let me see what did I say about Schwab? Schwab, 100. Reason why I say Schwab is if we keep Schwab, then we need to find a follower.
How about selling maybe 2% of Schwab, 2% of Alphabet, and in other words, the ones that have the highest percentage, and maybe even a little bit more of Schwab. Look at that increase. We had a huge
I have a
increase there.
hello.
Yeah.
I have a suggestion. I think one member in the past, because it's a large amount of money, we paid over 2 months or 3 months, I forgot, because we didn't have all the cash paid to one shot. So Joan is a long-standing member. I think it's a founding member. So we can negotiate with her saying that we will pay over 2 months or 3 months, something like that. So you don't
It's
have
not the actual money anyway. It does not really matter. It's not the actual money anyway. We just need to figure out how much was her payout. Do you guys remember?
17,000?
Yeah, 17,000.
Oh.
17,
Right,
17
but
plus.
I
17
think
plus.
we had a deficit of about 3,000, as I recall.
Right, 3,600.
Wow.
Yeah,
So
pay
that's
off
what I'm saying.
pay off the cash we have, and then next 2 months we can pay the rest.
Next 2 months, we'll only have $1,800.
I read Schwab review was very good yesterday. I don't know why we want to.
I'm sure.
Just
The only reason why I suggest get rid of Schwab is because if we keep Schwab, then we need to find a follower.
okay. Each month we have monthly contribution of 12 or 1,300.
No, it's only 900 now. It's only 900 now.
Oh, only 900. Okay,
Yeah.
so 900, 1,800 in 2 months, 1,800, and we can sell 1 or 2 stocks quantities next month and then pay the rest.
So, okay. Another thing is like we can trim Meta a little bit. So which one's the Google is 8.8%, but Google only like a 12% gain.
Yeah, but that's a long-term gain.
Alphabet,
That's a long-term gain. That's a long-term gain.
Alphabet's getting beat up quite a bit.
Yeah.
So
Yeah.
Yeah.
took up.
Let's get rid of. I'm thinking about myself too. I was
That
thinking for
12%
myself.
is a long-term gain. That's not anything within the last like 12 months.
No, it's total current, right? It's the gain since we have purchased this company, right?
Yeah, since 21.
Yeah. Oh, what
I
is
think
21?
So that's a
can
long
I
term.
ask,
Yeah.
can I ask
Oh,
whether any clubbers hold swap? If there's nobody who holds swap other than Joanne, then we can take profit because swap
yeah,
has
true.
not declined that much. But Meta has been beaten up, and it doesn't make
Well, we
sense
can-
to divest it now, unless you don't think the prospect is good with that company.
Meta is beating up. I know. The fundamental is wrong, that company recently. Something going
Well,
on.
both
The
Meta and
whistleblower,
Alpha.
right? Is that because,
Yeah,
let me
we
ask you,
shouldn't
do you
just.
guys know that Meta, was that because the whistleblower? How they
Yeah,
practice their business?
I don't think we should get rid of Schwab just because there's nobody following it right now.
Well, except we had a rule that we will only hold stocks that members were personally held.
Yeah,
Well,
that makes sense.
That was from
Because
way back. That was from way back. So that
Yes,
is why
it is.
why Schwab has been brought up at this point.
Yeah.
well, I don't know about past rules and if it's far in the past, whether we need to, get rid of a stock that's, I think, doing pretty well.
because there are so many stocks which are doing well. Possibly.
Just, if we took, let's talk about dollars. If we took 2,000 out of Alphabet and maybe 1,000 out of Meta, just for right now, that covers that. That would cover the 33,000 some dollars. Maybe just pick on those two, which are having their difficulties right now, and then we'll pick this up next month.
What I could do is send out the voting sheet to check anybody has Schwab. If so, Mel, that's the point. Because the reason why we have these in our portfolio, because some of us are holding these, right? We cannot personally invest. I cannot look all the reports. That's why we are in a club. If none of us have a Schwab, there's no point for us to follow, spending our time to follow up this company. This not just for Schwab, any companies. If none of us have just example like a paychecks, then why do we follow? That was the point.
I differ from that point. If something is interesting here, people may buy after the club buys. Not necessarily always. If we have it, we should buy for the club. If the club has it, we buy. You can buy also.
Well, the point is for us to not investing in real money is we hope that members will invest to what club owns, right? Take what you learned, practice here, and go home to invest your own.
No.
Also, we only have 9 members, so hopefully at least each
And we have
of
11
us
stocks.
follow one.
We have 11 stocks.
Somebody has carried for 2 stocks. I believe Mel is already carrying 2.
Hopefully, we will get some new members too.
Maybe.
That's the hope. That is the hope. It's not right now.
That
not
is
in
the
the
hope.
Yeah.
Well, on that note, I'm trying to recruit Sam Akinbami, who's knowledgeable about all of this, and he was there tonight, but he apparently was muted, and I guess we couldn't get him. But I'll be in contact with him.
Sam.
He would be a great addition to the club.
And
that'll be great.
Oh, Sammy raised a hand. Lower this. Oh, let's see. What did he say? Hang on. Maybe his microphone's not working. Just a second. Let me look Sam's comment. Where's the question go? Can you check whoever is the organizer? Where's my panel go? Sammy raised her hand. Also wrote a question. Oh, I see. I got it. What did he say?
And I also try to recruit my schoolmate from my high school. So
Oh, Sammy
Serena
said.
has attended. Serena has attended the meeting for a few times.
Oh, that
And
was
today,
her. Okay.
she signed up, but then she was in the beginning. She attended the beginning of it, but then she
Okay.
had to sign up because of work.
Okay.
Right,
Okay.
and Sam Akinbami has listened in to at least 2 of the meetings.
Okay. Awesome. Hey, can you guys see my screen with Sam's
Yes.
comment? So he said the presentation. No, his microphone audio is not working. The presentation tonight was very informative. I think Baku's suggestion for time limits was right on. We may need to modify SSG to address quarterly data. Let me know if anybody see these comments since I'm already listening. Okay, that's a different one. Okay, all right. So Sam actually stood there, but just his microphone is not working. Audio is not working. Sam's still listening. Awesome. He just raised his hand. I just saw it now. Okay. All right, Sam. Hopefully he can. That'll be great if he can join us.
Yeah, I think Jay, you should send an email to see who is holding Charles Schwab.
Okay,
So
I will
that,
do that.
yeah, if we recruit 2 additional members, at least we can give them the 2 additional company. I'm following 2 companies as well, so we can give
okay.
out 1. Yeah.
Okay. Do we need to make a motion for okay. Has anyone okay. Or what do I say? Anyone? What do you want me say in a motion?
Currently holding Schwab in their personal portfolio.
Okay.
Yeah.
I have a few shares.
Oh, excellent.
Never mind that.
Well, that
There you
answers the
go.
question.
Yeah,
That
you
answers
answered the
that
question. I don't need to have that. I don't need to have that then. Okay.
Yeah.
So
Yeah.
all right. So we don't need to make a motion for that. We already have an answer. Oh,
Okay.
you know, paychecks. Oh, I guess paychecks. Yeah, Joanne has paychecks. I guess I have.
But Joanne already
Okay.
left,
All right.
so we can
Yeah,
close
Joanne
it.
left. Actually, I think I may have a little bit paycheck because I was wrong.
Oh, okay.
I will check. I will double check if I don't have to. Yeah. All right. So any other motions then based on what our portfolio. So Mel, are you making a motion to sell 2% Meta and 2% of Google? Or
Yeah,
are you
what I'm
just
doing right now is looking at the share price, and I think we would find, for example, that CrowdStrike is overvalued. So
Oh,
Oh,
I
yeah.
was thinking maybe $1,000
Definitely.
off of CrowdStrike. That would be selling three shares. So 3 shares of CrowdStrike comes out to be approximately $1,000. For Meta, let's see, let's take a look at Google here. So 2,000 with what, 153 divided by 153. If we sold 13 shares of Alphabet, that would give us, that goes up to 3,000. So 13 shares of Google gives me 3,000. And then if we trim Meta by, let's see, 501, if we
We have
sell
12
two shares of Meta, that's another 1,000. That will total, actually, that totals 5,000.
That's 5,000, right?
Wait a minute, 13 shares of Google is just 2,000. So 3, that would be 4,000. So 3 shares of CrowdStrike, 13 shares of Google, 2 shares of Meta yields approximately 4,000 which would cover our shortfall.
Right.
And then I don't,
Takes us out of the red.
at least it takes us out of the red, and then let's see what happens next month. This might be a long, drawn-out process, and we'll have another 1,300, or we'll have at least another $900 to play
Right.
with
Right.
next month.
Next month. Exactly.
Why don't you sell more Meta? If Meta is beating up and we have almost 183%, why don't we not to take the profit, sell more Meta instead?
Well,
I sell more, trade
both
more.
Google. Okay, so let's say we do 4 shares of Meta and 13 shares of Google. Those are the two that are kind of getting beat up right now. That would then lead us also to $4,000.
Yeah, I would do that. Take the profit from Meta.
But
Wait,
this
are we
is
still
under
talking about CrowdStrike?
I only brought up CrowdStrike because I think the valuation is pretty rich, and yeah, I'm not
sold on
and
it.
that's the only reason I would mention taking some off the table for CrowdStrike. We don't have that much of a gain or anything. I sort of like the idea of getting 2,000 out of Meta and 2,000 out of Alphabet at this point.
But do you think, Mel, these two companies are overvalued now at this pricing?
What, Alphabet or Meta?
Both.
Their share price has dropped considerably. I don't know if they're over or undervalued. I don't follow either of these companies. I'm just looking at the news. I'm looking at the news, and the price trend is going down. I mean, they're really excellent companies, but there's a strong chance that they're going to have to divest some of
people
their
are
holdings.
afraid. People are afraid now.
Yeah. And
I
so,
know the Meta.
we can always.
I'll give you an example. Today, I forget which of the analyst houses it was, but one of them downgraded Google. One of the reasons was because they were getting beat up and the share price was dropping, but the other reason was because Google hasn't come up with a definitive plan on how to monetize AI.
Yeah, they're behind on that, and they're losing shares on the advertising. I mean, more and more people.
The antitrust stuff too.
Yeah, there's the antitrust stuff, and just even if you didn't have all of these antitrust stuff with Google, there's the problem with more and more people are using things like ChatGPT or whatever to do their searches. And so I've seen diagrams where you see the
definitely
the advertising that goes along with search continuing to drop. And that coupled with the fact is Google, what's Google doing to monetize AI? That's kind of up in the air. You could, when you do search, you can press Google. I haven't played around with that yet. All I'm saying is that there's a lot of flux in Google, and therefore I think trimming some now, we do have a profit, is appropriate. Meta is maybe not in as dire straits as Google. Its advertising model is really working well, as a matter of fact. Now, obviously, if they get, if they have to divest, that might change things quite a bit. But either of those decisions are at least a couple of years away.
Right.
So if let's just take a look at Meta. So their share price right now is about $500. We sold $2,000 worth of Meta. Okay, that's four shares.
That's a third. Okay.
500. That gives us 2,000. And if we sell 13 shares of Google, it gives us another 2,000. At least that gets us out of the hole. And we can always buy these back if we want to do a little more research, or
Do you still
whoever's following
suggest
them.
CrowdStrike?
Well, I bought up CrowdStrike. I haven't done too much. All I know is that, you know, if you look at its PE, it's kind of out of sight. And
They
let's
don't have
leave
much.
CrowdStrike.
They don't have much earnings.
Well, yeah, they're,
You know,
but they are looked upon as the premier company for security.
True.
So I don't know, maybe we should just leave them alone and kind of pick on Alphabet and Meta, at least for tonight, and get us out of the hole. And then we can revisit this later. And then, you know, those who are following Alphabet and Meta,
they'll still be there. They'll still be there.
yeah, they'll still be there. Maybe we can get.
They can still follow them, right? Yeah.
And, you know, if things are turning out that hey, you know, it might not be too bad, we'll put more money in them, and maybe we make a decision to get out of some of our AI related stuff. I don't know. It just so much going on. I would hate to sell ASML, but you know, to make room for other things, maybe. Well, let's just leave that off for another day. Now, Schwab, for example, is 8%, and it's a non-tech. Okay, it's non-tech. I guess that's why I would like to just keep it so that we have some balance in our portfolio.
A little diversity.
Diversity, yes. Anyway, that's my suggestion, at least to get us. It's, you know, getting kind of late here. We want to patch our hole up, and that's my suggestion. Anybody?
Okay. Right. Can you make a motion so I can put into send out a motion? Mel, can you make a motion?
Yeah, I'll make a motion. I'll make a motion to sell 4 shares of Meta.
Mm-hmm.
Anybody second it?
Yeah, go ahead.
Is there a second?
Second.
Okay. My motion made by Mel and second by Isla. Okay.
And then,
is a simple majority or 3/4 majority? I can't remember.
And do we vote on that right now, or I guess we're just going to put that up?
No, we'll email to you. We'll email you. Simple,
right.
Just say simple.
And then
we have to go to my iClub and vote.
Right. Okay, and my second motion will be, let me just back up here.
13 shares of Google.
13 times 153. 13 shares of Google. Sell 13 shares of Google.
13 shares of Google. Okay. Anybody second the motion?
Second.
Okay. I just do simple majority.
So then we'll see how the voting goes. How long do we want to keep it open?
I don't know. Oh, I said simple majority. Whoops. Let me check.
All right.
I have not done that for a while.
Yeah, they can calculate that.
Okay, when do you want to end it? When do you be ended? So tomorrow? Friday?
A week?
Well, you know.
Because some people aren't here and they may not be able to look at it right away.
Okay, so 28th.
Maybe Thursday. The compromise would be what, the 20.
Okay, closing voting sooner if a majority is reached. How's that?
Right, majority. Okay, that's good.
All right. Okay, so then I need to modify the other one too. The 4 share, same thing. Closing if majority reached, also give people more time for a week. Okay, all right. Save the motion. Okay, got it. Okay, I just emailed you all. Okay, so we can call the meeting adjourned?
Yeah.
Just one question. The marked up copy, Ela, I don't know if that was you typing up, you know, Bukol's suggestion.
Yeah.
Where does that reside so I can kind of refer to it?
Resides under portfolio right here.
Okay. All
Go
right.
to, yeah, portfolio
Okay.
right here, the last two. Okay. All right. Thank you, everybody.
Thank
Okay,
you.
this was
Thank you
great.
so
For
much.
me,
This was great.
Thank
Okay,
you.
Jay,
yeah,
Okay.
yeah.
yeah, listen, I would like to kind of ask, that Reddy and I are going to be presenting on